is there reason to be concerned about inflation and an inflationary spiral in the year ahead?
Well, I think central banks have to be careful because we are coming off of a post-pandemic period of elevated inflation. And so when you have those kinds of periods, even if they were a series of what should be temporary shocks, of course, the central bank is going to worry about inflation expectations adjusting higher, and some of those higher prices, filtering into wage negotiations, which makes things more persistent. But absolutely, as you suggested, the labor market here, is coming into this shock, in a much different position, in a weaker position than when we had the Russia-Ukraine shock, and you had, shortages of labor. We had vacancies over unemployed workers, at 2 vacancies for unemployed. That's a very different labor market right now. So we think going into this, the second round effects, the risks of that are more moderate.
So, Tiffany, when you look at the growth outlook, is there reason to take down the outlook for growth, given what you just said?
Yeah, because, the flip side of, that this is going to impact headline inflation. If we just look at retail gasoline prices, they're already up 20%, versus, there's a bit of a lag versus when the episode in Ukraine started. So that is a real income shock. We will get headline inflation that's higher. We think headline inflation could accelerate by a percentage point as a result of this, and that means real incomes will decelerate by a percentage point. Now, usually consumers have enough savings to where they can smooth over these kinds of things, again, assuming this is temporary. But the savings rate has actually dropped quite a bit. We've seen labor incomes that have fallen, that have the growth of labor incomes that have fallen. So again, we're kind of in a weaker position in terms of the consumer, and we do think there's a potential for this to, to take off some from growth.